All right, welcome to course or video number 6 and course 2 for on cash flow management. And this is for the school community of private practice owners. And today I really wanted to take an opportunity to talk about some situations that impact group practice owners, because some of the cash flow management is very different if you are a group practice owner because of the requirements that are on you and the requirements by law that you have to have certain payments to employees and whatnot. And so it's a little, I would say it works a little bit differently when you have employees underneath you because of those requirements. And that's why I wanted to do this video, talk a little bit about that. Can't answer all the questions within this video, but hopefully get some things to think about as you are paying yourself, as you are seeing cash flow move through the business to the personal, but also ways to be building protection within the business to make sure that you're always able to hit the mark and pay employees correctly. And so that's what we'll talk about in this video. Let's go. All right, let's get started. This is course or video 6 of course 2. We're talking about group practice cash flow. And so first, I want to talk a little bit about why it differs for group practice owners. Because of the fact that you have employees, you have legal requirements that a solo practice owner does not have. And so therefore, the dynamics between how you get money from the business to the personal will be a little bit different. And so I want to talk a little bit about that. The liability you face as the group owner, you may or may not know this. My guess is you probably know some of it, and hopefully you have a full grasp of the reality as a business owner and employer. Talk a little bit about tools to manage the short-term shortfalls, as well as technology that can be used to collect and send cash along. And then finally, we'll be building a plan to manage it every week, month, etc. And again, this is going to be more general. It's going to be less specific because group practices differ so much. But nonetheless, hopefully, if we can talk about it in a certain way, it'll help guide you as you're looking for solutions. And then hopefully within the show notes, as well as the community, as well as other communities, you'll be able to get the technology tools that you really need to solve this problem. Before we get started, as always, thinkingcapfinancial.com/newsletter. Make sure to sign up. You got YouTube, Thinking Solo. I'm on LinkedIn at Ryan DeRusso. Make sure to share this course. It's how we build this community and get more chatter and all of that advice and guidance. And then watch at 2x speed. I sound better that way. And then finally, let's talk about uncertain cash flow in a group practice. So it's important to remember that with great power comes great responsibility. And no, that's not just a quote from a movie, but it's your reality as the group practice owner, because you have power in the sense that you are the employer and you can guide therapy however you would like and best practices for that. But it also means you have liability that you've taken on and responsibility that you cannot avoid just because an insurance panel is slow to pay. It doesn't preclude you from not paying your employees, for example. And so if you are using that sort of tactic, then you are leaving yourself open to lawsuits. You're leaving yourself open to fines and fees from government sources and stuff like that. And so we need to be really protective of the cash flow and paying our employees because of that great power. Often what I find in group practice is they grow too fast. They get one employee and they're seeing some good income from it, and they get another one and another one and another one, and suddenly they have 6, 7 employees, and those employees' times aren't fully filled. Meanwhile, insurances are slow to pay, and now they can't pay their employees. And so we want to make sure when we have a group practice that we are growing methodically and carefully, because every time we're adding a new employee, we're adding a new layer of responsibility. And if you do that too fast, it can be a situation where you've built up too much debt, and the business becomes bankrupt when you go out of business. And we want to avoid that for obvious reasons. It's important to also remember, though, you're not going to be able to predict everything and as a business owner, as a group practitioner. So the more layers of protection that you build is more protection you're going to have from the uncertainty that is also there. And if you don't build in those protective layers, then what you can't predict will come along and suddenly really leave you at a disadvantage. When I have some clients who have very large group practices, and when the cyber attack hit, I forget the name of the provider this year. It was a large provider for them, and suddenly they could not pay their employees, or they were within weeks of not being able to pay their employees, and that's going to really do damage to the business if that's the case. And it's not their fault. They couldn't possibly predicted that the insurance company was going to have a cyber attack that would prevent them from paying 50, 60, $70,000 out. And yet they were going to be the ones who face the repercussions. And that's not fair. It's not right, but it's the reality. And so we just have to make sure we have protections in place to do that. And the protections in place for a group practice is going to be a little bit different than a solo practice. Yes, we want an emergency fund of some kind in the group practice, but we also have other tools at our disposal that we can use to manage that cash flow. One is creating a line of credit for your business. The line of credit is good for, hey, I need 5,000 here or 10,000 here, and not to cover one specific purpose, but cover issues as they arise. And so we can use that line of credit, pay what we need, and then pay back that line of credit, hopefully pretty quickly, but if not, over time. So it's not, so we have basically a pool of cash that we can tap into if needed beyond the emergency fund. You could always secure a business loan. It's better if you're securing a loan for a specific purpose, but it can be a protective layer within this. There's also small business loans that are available specifically for when you need cash fast. That could be done through a bit line of credit, but it also could be done as a loan. And a loan you're going to pay off probably over a longer period of time, but maybe at a lower rate, whereas the line of credit might be a shorter period of time, a little higher rate. So that's something to think about, but typically a loan could be for more money. You can use business credit cards. It's good to have the credit cards on hand for certain expenses, not huge expenses, but for smaller expenses. You're not going to get as many like 0% rates that you can get on the personal side. Instead, it's going to be, you can start off as a business credit card and maybe it's 20%, 30%, I don't know. But so it's an expensive way to borrow. But for certain things, you can be putting on the credit card, and let's say you need to cover a month's worth of costs on the credit card, but in the second month, all of that and more is going to come your way. Well, that could be a good way to get over that 1 month hump, since it's going to be hard to get a line of credit that quickly. So that's one way to think about that. But you have to be very careful, because then if that money doesn't come in, now you have interest that's growing, or a fund that's growing at 30% interest, and that's very difficult to get out of. And then, of course, cash, and that's the emergency fund within the business. If you can get 3 months, that's wonderful. If you're a large business, that may be very difficult. And so it's, again, looking at the expenses, and the expenses include your salary, the employees' salaries, and all the other expenses that's required to run the business. And if you can cover at least a month's worth of that, 6 weeks of that, 2 months, whatever is available, it's going to be really important for you. So you're not having to use these other tools to get over a short time span, because the other tools are more expensive ways to manage that. When you're in this situation where you are needing cash and either the insurance panels aren't paying, or something's happened on the private pay side, or whatever, there are ways that you can reduce your expenses in the short term to make sure you get over that hurdle. One, make sure to talk to vendors in this situation. They may be able to give you a credit for a month or 2 months, knowing that you're going to pay them back once the money comes, because they understand the area that you work in within the therapy world, and you might be a long-term client or something like that. So make sure to talk to vendors in those situations. Encourage fast payments from clients. If they're private pay, make a rule they have to pay that day, or make a rule if they pay within like 3 days, it's like 10% off or whatever. But just make sure there's a way to get cash in quickly from that. You're gonna have a little less flexibility on the insurance side. I mean, it's good to have someone whose specific job is to collect money from the insurance if you're large enough, and you would want them to be like a bulldog or a pit bull, in terms of like their efforts to secure those funds. Um, but uh, but there's only so much that you can do. And so maybe it's on the private pay or the group, like sessions pay type of stuff, to encourage more cash flow that you can guarantee quickly. Diversifying the revenue streams is just like in solo practice. If you have a few more revenue streams between expertise, areas of focus, group sessions, courses, um, uh, camps, things of that nature, then you're going to have more revenue streams protecting you. And therefore, there's going to be less, slow down to the point where you can't cover costs type of thing. And that's really the goal of this. And so the more you can do that, the better. It builds a stronger business because now you have a lot more different revenue streams coming in. And then build consistent contracts. As a group practice, you might be able to work with local government to provide care, or work with an education system, or the world's your oyster. You're going to know better than I. But having those contracts in place is going to build a consistent stream of clients, and that consistent stream of clients is going to ensure that you can pay your bills and pay your employees. In terms of how to do it, make sure you're leaning on software. If you're doing this manually through Excel sheets and whatnot, it's going to be such a burdensome task. And so the more you're leaning on software for accounting, invoicing, bill payments, and other things, I'm going to start a list of tech tools that you all can use, from accounting to invoicing, bill, and anything else. And so that list will slowly be building as time goes on. But in the meantime, making sure you're finding good tools that understand how therapy practices work, how they bill clients, how they pay employees, is going to be really important in that process. By doing all this software tracking and ensuring like timely payments and whatnot, what you're going to do is be able to find bottlenecks. And when those bottlenecks rise, then you can fix it. If one vendor specifically is always slow, then that they're the problem, and maybe the solution is getting rid of them, or finding another solution, or talking to them about it to ensure it doesn't happen again. Maybe you're realizing a certain insurance panel is way more of a problem than any others. Maybe we're getting rid of that insurance panel, but what's the impact on the bottom line? But at least and you're aware, and then we can figure out a solution to fix it. But if you're not tracking all this, you're never going to know. And it's going to be very difficult to determine on Excel sheet alone. So looking for those bottlenecks and figuring out sort of how to fix it will be really key in the process. And it's also important to remember that like not all cost savings are going to result in better profits. I had a client who got really frustrated with an insurance provider and got rid of them, and then saw income drop considerably, and this really put the group practice in a detriment. And it turns out like that insurance panel was really bringing in, or that provider was bringing in, a significant portion of the income on a monthly basis. And by doing that too early, it really put the business in a bind. And even though it seemingly saved on expenses and headaches, it was a significant impact on the profits. And it's fine to do that if the headache's big enough, but you need to understand the impact on the profits, because if you don't, then you could leave yourself really open to a bigger headache in the end. And we want to avoid that if possible. This also gets to knowing your percentages, like we talked about in paying yourself, profit first source model. You need to know what's going to operating expenses. You need to know what's going to your salary. You need to know what's going to employees' salary and stuff like that. And if you don't know it, then that's problematic. But if you know it, then you plan for it each month. So at least you know what you're covering, what you're expecting. And then if you're not seeing that, then you can respond to it in real time, which is going to be key as an entrepreneur like you are. And that's really it for managing cash flow in the group practice. It's such a dynamic part of management and the therapy space that I didn't want to get too specific there. But if you have specific questions that you have regarding managing the group practice, make sure to let me know. You can DM me directly. You can send it as a community a note, but ask, because I guarantee there's other folks in the space that have seen what you're experiencing and can help you in that process. So make sure to do that. Also, make sure to join the newsletter, thinkingcapfinancial.com/newsletter, additional advice. And if this helped at all, make sure to leave a testimonial because it helps us grow this community and grow just the knowledge base that we're building here. But until next time, let's go.